Here's where things get even bigger, much bigger, okay? This is Alex Karp talking here. He says, we were profitable again this quarter, and we now anticipate that we will remain profitable each quarter through the end of the year, okay? Obviously, they're not going to give guidance for future years and things like that, okay? And so now, with them coming in with 2 straight profitable quarters, and then now saying Karp actually committing to being profitable on an every quarter basis moving forward, which is a big difference between last quarter. Because what did Alex Karp say last quarter? Okay, Alex Karp said, we are going to be profitable on a yearly basis moving forward. But he would not commit to being profitable on an every quarter basis. The fact that he has done that now basically means S&P 500 inclusion is likely coming in 2024. All they need to do is keep executing now at this point in time the way he believes they're going to execute, and next thing you know, look for S&P 500 inclusion coming in 2024, okay? That is a massive line, and that is likely the reason the stock is up 20+% after hours here, okay? Now, in my opinion, in terms of gap earnings, I wouldn't be surprised if this baby really starts to roar. You understand, when you're a company that's a money loser, okay, some companies never get to that profitability stage. But basically the steps are, you start getting close to around break even, then you just eke over the bar, and then you start this kind of like exponential rise of your GAAP EPS. And I believe that's what's going to happen here with Palantir. And you're going to see their GAAP EPS kind of take off like a rocket ship over this next, I would say, 4 to 6 quarters here in regards to this, okay? Now, this matters as much as anything you're going to see here today, okay? This is GAAP. This is generally accepted accounting principles, okay? So you can't like pick and choose this and that, okay? This is GAAP income from operations. They just went GAAP income from operations actual positive for the first time, okay? We achieved GAAP operating profitability for the first time in our company's history, generating GAAP income from operations of $4 million. This is something the bear said would never happen with this company. Oh, they've always lost money, so they're always going to lose money. And this is why it's important that as investors, you don't, just because a company's done certain things in the past does not mean it's going to continue on that way, whether that's losses, gains, anything like that, okay? And when you run the numbers on Palantir, it was kind of looking like this company was going to get to GAAP income from operations positive at some point this year, and they just did it, okay? Now, in terms of the peak bear sentiment around the stock, that was around Q3 of 22 here, okay, when they had about $62 million GAAP income from operations loss here. That hurt them substantially. That's in the past now at this point in time. And, you know, look at the strides they made in just a few quarters, okay? Look at the trend. This is from $62 million to about $17 million negative, $18 million, to now positive $4 million, okay? If I had to guess, this is going to continue to go up exponentially over this next 4 to 6 quarters. And you're going to start to see GAAP income coming in at tens of millions of dollars, then 50s of millions of dollars, then $100 million plus, okay? So phenomenal to see that. Now, U.S. revenue was up about 23% here, okay? Now, their total revenue was up about 18%. So if I tell you their U.S. revenue is up 23% and their total revenue is up about 18% roughly, where should your mind go? Okay, I'll tell you exactly where your mind should go. Your mind should go to a place of saying something's off there. What is off? Well, that means international business is not quite up to standards right now, okay? If the U.S. market is outgrowing quite substantially, we're talking about 5 percentage points over total revenue. It means international markets are lagging for whatever reason, okay? What's going to happen with the stock price moving forward now at this point in time, right? Tomorrow, we'll see what the move is. Maybe it's a 20%-ish type move. We'll see. Here's the deal, okay? Money's going to continue to flood into Palantir for the next, I would say, 6 to 18 months, okay, continue to flood into this stock. And the reason money's going to continue to flood in the stock is because people are going to know S&P 500 inclusion is likely coming sooner rather than later. So they're going to, fund managers, hedge fund managers and whatnot are going to continue to pile money into this baby, and more and more and more. Now, the one thing that could kill the stock price is if they came in with a negative EPS quarter on a GAAP basis. If that happens, then boom, the stock price would get hit 30, 40% in a day. It would be nasty. So as long as Palantir stays profitable here, the money will continue to pour into the stock. It doesn't mean every day the stock's going to go up or every week or even every month. But I can tell you the trend is going to be upward and upward and upward. And that's, listen to this, that's regardless of what happens in the market overall. Doesn't matter. Doesn't matter at all for Palantir. The market can go nowhere, the market can go down, the market can go up, and you're going to still see money flooding into Palantir for the next many, many quarters, okay? Unless, once again, they report a GAAP negative number as far as EPS. That changes everything if that was to happen, okay? So Stanley Druckenmiller, he owns a substantial amount of Palantir shares, okay? 1.27 million shares is what he owns as of last reporting, okay? Average price is around $20. So he's down substantially on these shares. So his position's an 8-figure position, which is obviously a pretty large one to have in a company like Palantir, right? It's not nearly as big as some of his other positions out there, certainly, but nonetheless, like you got 8 figures plus in a stock, like that's quite a bit of money, okay? And so it is important to understand that he has that sort of position in the stock, and it's with this sort of cost basis, which obviously tells you that he expects the company to be much higher valued in the future, okay?
It could be a beautiful opportunity and a hard landing, just like 01, 02 were a beautiful opportunity when the tech bubble burst, going forward and for companies who would benefit from the internet. AI.
So his perspective on the market is similar to mine, right? It sounds like he believes we're kind of in an 01, 02 type time frame right now, right? Which is kind of after, obviously, the tech bubble went kaboom. It peaked at the very end of 99 and in the beginning of 2000. And honestly, this has reminded, what the period we've gone through over the past 2 years has reminded me much more of the tech bubble. And I said this a million times. It reminds me much more of the tech bubble than the great financial crisis. You don't have all the crap you had to deal with in the great financial crisis. That was a whole different set of problems and set of situations there, okay? Including you had deflation to deal with in the great financial crisis. We've had the opposite of deflation to deal with, obviously, in this situation. It's reminded much more of the tech bubble where you see stocks going down 60, 70, 80, 90, some 100%, right? And interest rates going up and all that happening at the same time. Exactly. If AI really does take off over this decade, it becomes this huge thing, which he obviously believes it can be, okay? And positioning in companies like Microsoft, NVIDIA, Palantir, and others obviously shows that, okay? So if that's a situation, I can tell you companies are going to become exponentially more profitable. If companies become exponentially more profitable, their stock prices will go up and up and up, okay? Because the way companies are valued is based upon their net income, right? And what you're willing to pay for that company over time. And especially if you consider we're toward the top of a Fed tightening cycle and it's more than likely going to get looser, if anything, moving forward, obviously what you're willing to pay with Fed funds rate at lower rates than it is currently is more for stocks. And so the whole prediction about don't expect good returns for the next, this decade essentially, it doesn't make sense if you're really betting on AI. Nonetheless, folks, if technology really takes off over this next 5-10 years, I can tell you it's going to make companies far more efficient and profitable than anything we've seen before, okay?